Hey guys, Unicorn Trader here. Just want to put together a quick little video. I know I haven't posted one in a bit, um, but I've been working on a new trading system for the last several months, so I've really been posting much. I did want to post a little quick video on um, Delcath systems. It's been the hotness at the moment, and I had several successful trades in it. And this video is for those that may have a little trouble trying to trade those hot moving stocks um, that everybody calls a pump and dump or whatnot. They're actually not that hard to trade, and, I actually would have won on all my positions except for I was trading on my cell phone on a stock that moves 5% in a minute. So I didn't miss out on a few gains, but overall positive. Um, I just screenshot this off my account just so you can see that I'm not totally BSing here. But the important thing to look at on these is to think about the mentality of who's in it, what's in it. You have high frequency trading machines are in this, and you have shorts that see a 100% pop or more, um, and it's on their radar. All they're going to do is look at that. They're just going to sit and wait for a breakdown. As soon as something pops hard, they're always looking at those top 5 gainers of the day, especially when they're over like 20, 30, 40%. And particularly in this case when the news is we're not going to get into the news. We'll just say the news was not amazing. Um, it was very speculative news. So that being said, you have to look at the players in the stock. Who's in this? You have a bunch of longs in this that have been averaging down and averaging down and averaging down, and then you have these massive pop. And when the massive pop happens, shorts, it's all over on shorts radar. Um, so what you want to do is play when both parties, that's shorts and longs, are trading in the same direction. And there's a real easy way to tell this. Um, and time frame is important. That's probably the one thing you can take away from this video is time frame is important. And right now this is daily. Greens are my buys, reds are my sells. But if you switch this down to 5 minutes, which is generally how I like to look at it. It depends on the momentum of the stock. If there's not a lot of volume, it's not trading a lot, then the shorter the time frame, the worse your the worse the indication of volume and price. If it's something that's trading very 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 volatile, or has a lot of volatility, the shorter your time frame, the more accurate. So you can look at these plays on a 5 minute. We'll just zoom in on this one here. This is a 5 minute, and so I had a buy here and a sell there. It's 2.5%, whatever. I had a buy here. Now this is a bad buy. Because notice the volume is well below, this black line is average volume. The volume is well below average, and it's a red candle. Then you have an over average red candle, followed by a green under average. Okay. That, I had a buy, sell, buy, sell. I was negative at that point, and then a buy here and a sell here, which brought me back to positive on the 3 trades. But if you take this down to a 1 minute time frame, you'll see why this was a bad trade and the other two were good. I switched it to 1 minute, and now we gotta find it wherever the heck it is. There we go, somewhere around here. If you look at the 1 minute time frame, you'll see that there was a little bit of a drop down here, and then a consolidation candle, another consolidation candle, which is why I bought it. And that was kind of risky. That's why I didn't make that much on it. Here, you had another drop off, and I bought. And unfortunately, I was trading on my cell phone, and I would have sold this on another 2% move, but I couldn't get the order in fast enough, and it moved back down. Which I just sold it at that point because I missed the move up. And then you have this little consolidation period here. What's important to look at is the move. If you look at the move from here down to here, that's 18% move. If I was shorting this from this position, let's say I shorted this thing, and it bounced, and it bounced again. And by the way, this move up these moves are generally bulls and bears buying together at the same time or selling together at the same time. Here they're selling together at the same time, and here they're buying together at the same time. When you get a really big power move like this, they're really buying and selling or buying at the same time. And that's what you really want to look for. That's why you have this, and I actually didn't start playing this till right around here. This is why you have this huge drop off and then a comeback, because everybody was selling. All these bulls that were in here, sell, at the same time shorts were selling. And then when the price came down to a certain point, they're like, dang, I've made 20% on this one. I mean, this drop was 30%. They're like, that's enough. I'm out. And they start cashing out. At the same time, bulls come in. And a lot of this is high frequency traders. But the important thing to note is the volume comparative to average. On a 1 minute candle, because this is a very, very fast moving stock, you have to look at a very, very much shorter time frame. If it's a slower moving stock, you can look at a longer time frame. But this buy down at the bottom, so this is the real key. This is the candle that tells you what's happening. You had this drop off here, and then you had an over average green candle. That means there's some support there. Anytime you have over average and a green ending candle, that's pretty good. It tries, it fails, it fails. And then you have another over average green candle. If you look at all these green candles, you're not going to see a whole lot of over average. But you have two over average green candles. That is a sign of strength. Okay? And so then your buy is either to buy a dip in the next candle, or in my case, I just bought it when I felt like it was going to go up. It actually popped. This is, if you take this down even shorter time frame, you'll be able to see exactly what was going on. This thing was moving, wobbling right in here. So I just bought it because you had an over average green candle right in front of it. And then, of course, you get the rip, which I sold at the 200 moving average, 200 period average. This is a 1 minute time frame, so that's kind of deceptive. It's not 200 daily moving or nothing like that. It's just 200 period. So 200 minutes. But, I made my 6%, whatever it was. Yeah, wow, I made 8% there. I made my 8%. And I was out, so I don't even know what to make it. But I could have made any more, but again, I was trading on the cell phone. But the key to the move is the over average green candle at the bottom of a strong move. So you have a strong move down, and then you have over average green candles. Okay? Over average green candle. You'd say, well, this one down here, it's time to buy. Well, yeah, you could have bought, but you're nowhere near over average, which that's weak. That's weak. I got lucky on that play. I did not get lucky on this one. I knew exactly what was going to happen there. Concisely, well, the inverse is when you have an way over average green candle on an uptrend. It will tank after that. If that over average is on, you can see right here, here's an over average at the top of an uptrend. You do not want to see over average at the top of an uptrend. You know, you can even look at it right here. You got a lot of over averages on this run up, creates a sell off. So the key is to figure out what the drop. You want very hard drops. You want hard drops. That's what creates your reverse momentum, because shorts are going to take profit. And this is not an anti-short or pro bull, whatever. I just play long at the moment because the account I'm using, I don't like the margin. So, again, this is a bad play on this one. This is an over average green candle on an uptrend. That was just bad. But if you look shortly ever, you have a long-term downtrend, and if you look at this trend, nothing's over average until this candle right here. And then what happens right after it? Pop. Then you have an over average green at the top of that pop. Time to get out. What happens? Downtrend. Nothing's over average. Over average. And this is a doji, which right here. Well, it's kind of a doji. But it does not instantly create a pop. But that is a sign of strength. So that's what you want to look for. That sign of strength. It fails, and then it happens again. Over average green candle creates that pop. You're still over average at the top of that move, down. Okay, this is not rocket science. It's actually pretty freaking simple. And I was not trading this actively. This is literally, I'm on my cell phone doing other stuff, trading something that moves 10% in a minute. So risky trades, but the point being that you can see this very easily. Don't trade this in any other point. You have a big drop off, and then you have an over average green candle. So you buy on the next candle and you make your money. You have a huge drop off. The volume, this is how you see it. The volume comes way in, and then you have an over average green candle. Then you buy it on the next. Or, if this comes back into be a doji or something like that, like here, like right here, drop off, over average green candle, doji, boom. Drop off, it's barely hit average. Pop. The trend cannot be denied. Or the pattern, I should say. Where's my line? I made a trade today. Just ran it. I'm just like, I'm gonna trade this. Let's do this. Just drop. Just do it. Same principle. The key is not to do it within the first few minutes, because like here you have over average green candles on an uptrend. Like, it's dead. So you can't like in the first like 10 minutes or whatever, 5 minutes, this theory does not work very well, because there's just too much. There's not a pattern has not been established. That's the key. The key is a pattern. The key is shorts come in, hey, they're profitable, hey, they're going to close out, and high frequency trading machines are going to come in and support that move back up. And the more it moves up, the faster these shorts want to get out, until it normalizes. So you have the drop off here. You have a huge doji. I mean, you have huge red candle. Red candle, huge volume doji. It's not dead on doji, but it's pretty close. The next candle is an over average green. Put your buy in. Or you could buy it on the next candle. I could have bought it here on a dip. That's kind of a way to do it, because if you look at the pre-market right here, you have an over average green candle. The next, if you'd bought it on this candle like at the end of the minute, you'd be like, oh, I'm sweet, I'm good. Yeah, you would have been here, but the next candle was down. The next candle was straight down. So sometimes it's good to like see that. You want to see that over average candle after a long downtrend, because that shows that the sellers are starting to dissipate and the buyers are starting to come in. And it's the first sign of a possible trend change. So that's what you want to look for. It's the first sign of support. Sometimes you get a massive move like this. Actually, the first sign of support was a doji on that giant red volume, but you can see that the candle afterwards, after that giant trend down, will show some sort of momentum. You can look through this thing. I mean, you can just keep going. Look for any over average green candle at the bottom of downtrend. Any over average green candle. So here's a downtrend, over average, right here, buy, uptrend. Over average green candle at the top of the uptrend, down. The pattern is so flipping simple. And this usually works on high volatility, high short, not when I say short interest, not that the shorts are already in the stock, but the shorts are salivating, waiting for this thing to tank. Any sign of weakness, the shorts will pile on for that gain, and they're making money. I mean, this drop down here is 20%, 19%, whatever. I mean, that's a solid move, but they have to take profit at some point. And if you're 20% up in a 5-minute time frame, you're gonna sell. You're gonna buy to close. But you know what I mean. So this is what you're looking for here. I mean, here it is again. Downtrend, over average green candle right here, minor little pop. So there's a sweet spot to it. The later on in the day that goes, it's not as great. It depends on the volume that's happening in the stock and who's trading. But like when you get into a period like this and you're like, oh, there's some block trades here, there's some whatever, that gets a little more risky. When you see a downtrend into a doji and then over average green candle, there's going to be upward movement. It means the sellers have dried up. So, and this is on a very, very short time frame. 1 minute is what I prefer on this. But if you look here, you have an over average green candle here, your next one here, and your next one here. The first one is basically at the end of this downtrend, which doesn't really do much. And this is very late today. Gray is the end of the day. It tries to show support, it fails. So that's not really, that would have been a dangerous trade there. But that did follow the indication. The next one down, over average green candle, creates an uptrend. High over average green candle creates a downtrend. It did close out at the end of the day, but the last 30 minutes of the day, has a capital curve or whatever. The whole market sometimes can run up at the last 30 minutes of the day. But that's just what I'm going to show you on this one. This is a high volatility stock, high short. And when I say short interest, they're very aware of the moves, and so they are going to come in whenever they can. But that's a good solid way to play high volatility, high short interest, but high bull interest stocks. This thing popped 100%. I mean, crazy. I didn't even start looking at the stock until after it moved 100%. So, not that I was waiting for 100%. It's just it wasn't on my radar. I really wasn't. I don't generally look for high volatility type stuff, but I just play this one for fun. So that's just one way to look at it. So look for those high volume, over average volume green candles at the bottom, strong downtrends. They can show a sign of a support level. So good luck. And of course, I'm a total novice. So you probably shouldn't even listen to me. Good luck.